Ya, Assalamualaikum warahmatullahi wabarakatuh. Selamat sore rekan-rekan semuanya. Jadi kita jumpa lagi dalam acara diskusi internal riset. Dan kali ini adalah series ke-10 ya. Dan untuk topik diskusi pada sore hari ini adalah Mobile Technologies, Financial Inclusion, and Inclusive Growth in East Indonesia. Dan kita sudah menghadirkan juga pemateri kita pada sore hari ini, yakni Bapak Dr. Miguel Angel Esquivias Padilla. Beliau adalah full-time lecturer dan researcher di Fakultas Ekonomi dan Bisnis Universitas Airlangga dan juga bekerja sebagai peneliti di Free Trade Agreement Center Surabaya. Dan kami juga menghadirkan discussant untuk diskusi pada sore hari ini, yakni Mbak Namira Samir. Beliau adalah PhD candidate in Development Policy and Management, Global Development Institute, the University of Manchester. Dan beliau sebelumnya mengambil studi di Durham University di bidang Islamic Finance. Baiklah, tanpa berlama-lama lagi, saya persilakan untuk Bapak Miguel menyampaikan materinya.
Oke, very good. Terima kasih banyak, Zaki. Sorry, saya tanya, apakah nanti saya presentasi dalam bahasa Indonesia atau bahasa Inggris lebih baik bagi teman-teman?
Yeah, I have asked the audience, you may present in English.
Oke,
Yes.
siap. Baik, so saya izin untuk share screen. Oke. Oke, so here we come. Baik, oke, selamat sore. Seperti Zaki sudah menjelaskan, nama saya Miguel, saya dosen di Universitas Airlangga, peneliti. Sebagian besar dari waktu saya memang untuk kegiatan penelitian. So anyway, last year, so I focused some of my research papers on issues related to financial inclusion. Actually, I wrote 2 papers on financial inclusion using different data sets. This specific paper, it has the advantage that it's a database which is much larger than other available data sets, like the World Bank FinTech dataset has something like 1,000 respondents. This one has 20,000 respondents, no? So it's substantially larger and has a very detailed information on financial habits of individuals. No? So we try to build a paper in which we can analyze aspects related to financial inclusion, and then we try to bring into the screen two issues. One of them is the link with technology, whether mobile technologies can help financial inclusion to go deeper. And the second is whether access to financial services and technology has an impact on income. No? So on that way, we can try to find a perspective on how inclusive or how much is the impact in the income of individuals. So this is the background of the paper. So some other motivations that move us to enter into this paper is that generally the literature finds large gaps in inclusion from gender aspects, female and men, also based on education. The differences in education are very large, or the income gaps, or gaps based on location, for example, rural and the urban divide, or differences arising from age, or sectoral jobs that people have, or even among people who are unemployed. So there are very large gaps between the people, socioeconomic gaps, that are likely related or have something to do with financial inclusion. Another motivation is that there are still a lot of people in Indonesia who remain unbanked. But the point is that how to explain that financial sector, which is very profitable in Indonesia, which is very liquid, which has very little problems problems in payments of credit, etc. How come still a lot of people remain unbanked? So another thing that motivates the study is to study or to try to look whether there is a link between technology, the wider use of mobile technologies, applications, internet, computers, and financial inclusion, whether technology is helping to close that breach in financial inclusion. Certainly, there are also technological gaps which are worrisome because we find like there are still like something like 60% of people who have no regular access to internet, or something like only 32% of smartphones that are actually connected to the internet. Although a lot of people have, only 32% of them are connected to internet, and still there are only 5% of financial transactions are done using smartphones. So which means that the issue of fintech or the role of financial technologies may be exaggerated in the literature. So, okay, so this is a little bit the motivation of the study. So the scope of this paper is within mobile technologies and financial inclusion. So we try to analyze the role of technology in removing obstacles. So one of the roles of technology is how does technology help to remove obstacles that people have, obstacles related to lack of documentation or perception of high costs or lack of information. There are a lot of obstacles that people report, like becoming a reason why they don't have bank accounts or why they don't save or why they don't ask for credit. So we try to study whether these technologies can help to remove those obstacles. Or we also try to see how technology helps in changing the motivations of people. And instead of using banking services for consumption, whether it's helping, technology is helping people to save more for business or for emergencies or to start investing in some financial services. So, okay. And we also try to study whether this technology is helping to spread financial services, moving from classical or conventional services, which are saving and credit, moving towards payments, mobile transactions, payments of bills, remittances. There are many other services which are like non-conventional, which are still expanding. So we want to see how financial technology can help to improve or to increase services towards those non-conventional services. And finally, we want to see whether mobile technologies and financial inclusion have actually an impact on the welfare of individuals. Okay, so this is a little bit the background. So it's very much the link. We are looking for these links. Okay, so what is the focus on a little bit the novelty that we propose in this paper? One is that there are 4 big blocks of things that we are studying here. One is the individual characteristics of individuals. People can be categorized according to gender, to age, education attainments, the income level, the location, either provincial or rural and urban, okay, or whether the job, the sector where they work, or even between employed and unemployed people. So there are some socio-economical aspects which are interesting to study here. Another focus of the paper is that we are bringing the topic of technology, and technology we are splitting into 2 different levels of technology. One is simple technology, which are mobile phones, and the other one is more advanced, or what we call it high tech in this paper, which is related to smartphones, to computers, and to the access of internet. The third aspect that we are bringing is location. We are comparing 4 different provinces, which are very different, which have very different levels of development. Most of them or all of them in East Indonesia. And then finally, we are comparing in financial services. We are comparing formal services, conventional services, and other services. In terms of formal, is that financial services can be categorized between formal services, means provided by formal institutions, institutions that are regulated by the government. There are also semi-formal institutions. There are informal institutions. Later we are going to see a little bit what do we mean by each one of these. And then family or friends, which are very informal levels of finance. Nevertheless, many people rely on those informal sources to borrow money or to lend, etc. Then between conventional, so we try to split between opening bank accounts, which is often used as indicator of financial inclusion. We try to go deeper there and to differentiate between bank accounts, savings, and also credit, which are different, which have different purposes. And then we try to bring into new services which are like expanding, payments of bills, insurance, remittances, mobile banking, ATMs, or e-money. Okay, so in the literature, basically what we find is that, we try to focus on 3 blocks in the literature. One is the impacts of a more inclusive financial system on welfare. So in many papers, it have been discovered that having a more inclusive financial system has a positive impact on reducing poverty in rural and also in outside urban areas. There are also some interesting papers that find that more or wider financial inclusion has an impact on reducing unemployment or allows people to achieve higher levels of expenditure. It helps at the macro level to raise the national saving levels. It can also support government policies and aid transfers. It can also help as a caution against financial shocks. It helps to manage the risk. And I mean, there are a lot of positive feedback on impacts of financial inclusion into welfare of individuals. So that's one of the important things that we find in the literature. The other thing is that another source in the literature is related to gaps. Okay, so large, what we call gaps here is that it's very often we find that some people have more access than others, or some people are or take advantage more of financial services than others. No? So there are gaps in access. There are gaps in drivers of finance. Some people are more motivated for business, and some other people is mainly for consumption. Okay, but meaning that some people who actually may want to get loans for business may actually be excluded from the sector. Later, we are going to discuss some of these issues. No? Or gaps that come from motivations or gaps of barriers. What I mean for gaps is, I mean, it's a little bit the same concept, no? That some individuals find very large barriers in information or very large barriers in the cost of finance or very large barriers in access, which means there are no branches or they have no access to mobile technologies or they don't have enough documentations. So when you have some people facing different levels of barriers, so that can be one of the reasons why some people are included in the financial system and why some people are not. Okay, so we want to see how this technology can help to remove barriers, to reshape motivations, to create new drivers of financial services, and to facilitate access. So it's a little bit what we are exploring on this paper. Okay, so we already talked about the different motivations in finance, which in the literature you find papers. Some papers focus very much on financial infrastructure, which means financial inclusion. They try to see the impact of financial infrastructure, bank branches, ATM machines. Anyway, there are many indicators to measure financial infrastructure. So that's one string of the literature. Another one string is related to financial literacy and knowledge, which means or try to explain that inclusion differs in countries because some people are more literate than others or have more knowledge or more skills than in other markets or other people. So that's another branch of the literature in financial inclusion. And the third one is related more towards, it's like more market approach, which is the voluntary and involuntary exclusion, which means sometimes people remain unbanked because they actually are not interested in financial services. Okay, that's the voluntary exclusion. They don't want, they don't care, they don't find it important, necessary, and some other people are excluded because of lack of papers, because they don't have collaterals, because they don't have access, etc. No, that's the involuntary. And each one of those two different sources of exclusion, we can say, require different policies, okay, to promote inclusion. So that's why it's interesting to try to differentiate them. Right? And of course, the issue of informality is also very interesting because in places like Indonesia, informal financial services are still very large. Huh? So there is a lot to see there. So, okay, a little bit what we already discussed. Now, access to finance. We are talking about bank accounts, savings, credits, and other services. We are also touching, or the survey touches a lot of issues related to the frequency and the use or purpose of the banking. what for they want to use that money. And in things related to formality, there is also, we can split between interpersonal borrowing, family, friends, or trade credits, or private money houses, or pawn shops, or cooperatives, which is also very interesting phenomenon to study in Indonesia, because most of these things coexist, which means the financial system in Indonesia and in many developing countries actually have all these different providers of financial services coexisting. So it's interesting to find what differs or what drives them in different ways. Okay, so a little bit general characteristics of the data. So there are more females than male in the survey. Nearly 58% are female, 42 are male. There are more or less 50% of people are low income, and the other difference, the 50% is medium or high income individuals. 35% of respondents are from Java Timor, and the rest are split in the other 3 provinces. There are 65% of people living in rural areas, and 35% in urban areas. And then based on technology, 70% or 72% have access to low technologies, and only 31% to high technologies, means mobile phones, sorry, smartphones, computer, or internet. And then, anyway, we have here some basic descriptive statistics. On the level of education, we find that 40% of people have only elementary school, 23% have high school, junior high school, etc. So what I want to point out here is that there is a lot of diversity in the data. So what do we use here? So we use three approaches. The first one is, or the basic one is a probit model, in which, based on this, what we are trying to model is that we want to see how a specific service, like saving or credit or other financial service, is influenced or is affected by some socioeconomic aspects: education, income level, location, job, etc. And some other aspects, like, for example, the rural or the geographical location, or the technology that they employ to access services, or technology available for them. So we want to see how these different sorts of factors affect all the services that we are exploring, the formal and informal services, the conventional and the non-conventional services, and those new services that are arising. And in that model, we have like 4 big blocks. One of them is determinants to access finance. The determinants to access finance means whether age influences that the older people are more likely or not to get an account, okay? Or higher education people with higher education are more likely to use accounts. So that's what we call determinants to access of finance. Then we also want to see how the same aspects influence in the barriers. For example, whether the low level of education is related to some people facing higher barriers in cost, or in access, physical access, or in documentation required, etc. Or we also want to explore, with the same socioeconomic aspects, whether those things have something to say about the motivations that people look for finance. Okay. So anyway, so we model the different aspects using the same socioeconomic variables. And then afterwards, we model, or we try to see okay, whether this access to financial services are related or not to higher income or expenditure. Actually, we are using more expenditure, if I'm not mistaken here. We're using whether those factors actually are influencing the income level of people, or the expenditure level of people. So because that can help us to see whether financial inclusion has something to say about income growth, and whether technology is also, or has something to say to income growth. So we also apply a robustness test model, which is a seemingly unrelated probit method, which there is a possible and very likely problem to arise here, which is endogeneity, which means that, of course, people who have higher income level are more likely to have a bank account. okay, or people with higher income level are more likely to have smartphones than people who have low income. I mean, we may think that it's not necessary to run a model like this to come out with those conclusions, or that for sure the profit model will identify that income is related to having or not a bank account. So to face that possible endogeneity, we use a sure model in which it estimates simultaneously, okay, the error terms. I mean, the error terms here are simultaneously estimated to see whether income is related to mobile phones and whether mobile phones are related to income level or not. So we try to find out where there is a strong correlation between those things or not, and that will tell us whether you have to estimate them at the same time together, or you can actually estimate them separately, which that is done by a probit. So the sure works here a little bit more as a robustness test to find out whether we need to simultaneously estimate the models. So if we go into the findings, probably if you read the paper, you get a little bit confused, because there are so many tables and also indicators, it's hard to come out with conclusions. But if we want to get a little bit general conclusions, for example, we can find that certainly higher education is related with higher levels of savings, higher levels of credit, especially in the formal sector. For example, one of the main findings is like having higher levels of education allows or move people to access formal finance and reduces at the same time informal financial services. Okay, so education has something to do with financial inclusion and with formality in financial services. We also, for example, find that low-income people are less likely to have access to formal services, which means that it's very possible they are more likely that if they want to be included in the financial sector, they have to look for informal services. Or in credit, for example, someone who has low income level is very unlikely or has 12% probability of not being in the formal sector. And by contrast, the same low income people has a 12% higher probability of having credit or looking for credit from the family. So we find interesting things here related to education, to the income level, and also to the use of technology. Most of the variables capture and try to capture the role of technology on finance are significant. And then we find more or less interesting findings. For example, we find that access to low technology can help individuals to increase in 8.2%, or they are more likely to have formal saving accounts when they use low technology. But when they use high technology, which means a smartphone or computer, those individuals are 18.6% more likely to have a formal account. And they are also more likely or less likely to have an informal account. Okay, and that sort of relation is quite consistent between the different financial services, suggesting that high technology can actually empower more access to services, to formal services, across individuals. Related to other services, we find, sorry, here I'm a little bit not so systematic in presenting the results, because many of the things are in the paper, so I think you can also go through there. But anyway, here is a little bit general what we found. For example, in terms of determinants of finance, so we find that female are more likely to be active in informal savings and informal credit. So women tend to be more informal in financial services than men. Okay, but interestingly, female find less barriers to finance, which means they are more resourceful when they come to look for sources of finance, compared to men. Okay, men, they have less level of formal savings. They have more access to formal credit, which is an important difference here, perhaps because more men are actually formally working, and that allows them to look for formal credit. Men also are more likely to have investments or to save for investments to look for credit in business or housing. They are also less likely to use credit for consumption, but they tend to be less financially included, no, compared to female. Then related to the level of education, so we find that yes, higher levels of education improve or helps formality in financial services and lowers at the same time informality. By contrast, low levels of education promotes more informality, or people with low level of education are more likely to be engaged in informal financial services, are more likely to be also engaged in foreign remittances. Of course, this is also explained with the phenomena of TKI. No? I mean, Indonesian workers working abroad are mainly people with relatively low levels of education. Okay, and there are people with low levels of education are actually more likely to look for finance from family and friends. I mean, we can say that there is nothing bad with informality and with family, but in reality, the cost of finance through those sources is much higher than the formal sector. We also have that people with higher income level are more semi-formal. I mean, they have more access to semi-formal credit, and then they reduce the dependency from family. When people start increasing their income, they tend to rely less on family and more into formal institutions. Or when income is low, people are less likely to get formal credits. And here we can explain the question of why, if we have a very healthy financial sector, why a lot of people are excluded. And one of them is because many people with low income are not given credits, okay, because there are no guarantees or etc. No? They have no collaterals or assets that can support their credits. No? Because the reality is that people with low income are actually looking for credit, but they end up looking for informal credit. So what we find is that people with low credit, they have low likeliness or low probability to get a formal loan, but the likeliness for them to get informal credit also increase. So it means there is a real need for credit. People in the urban areas, they also tend more towards formality, both in savings and credit. And then they are also more likely to be engaged in mobile payments. Mobile payments, we can say that they are mainly taking place in urban areas. In the rural areas, there are less formal savings and credit. Okay, so informality is higher. There is more informal service and family credit. And then there are more international remittances, which I think it's in line with the phenomenon of TKI. No? We also see that there are changes in motivations and barriers due to technology. For example, no, the saving motivations. These are due to technology. Yeah? The higher the technology that people use, the less saving for consumption. So it means people start saving less for consumption. And then they start saving more for emergencies, and then they start saving more for businesses. So there is an important contribution of technology here in promoting more awareness of emergencies and also saving more for services. Another is that for credit, it also lowers the credit for consumption substantially by 10%, and then it increases the credit for housing, and it increases the credit to start or expand a business. I mean, the use of wider technology. It also removes barriers. For example, the perception of high cost. It goes down by 5% when people have simple mobile phones. And when people employ smartphones or smart technologies, the perception of high cost in finance drops by 10%. Okay, which means that having access to more information, services, etc., can help them perceive that actually it's not that hard or it's not that expensive to have access. Or these things of don't know, that which is one of the reasons why people sometimes don't have bank accounts or don't save or don't ask for loans, is because they don't know, they don't have information, which is a proxy of lack of financial education. So we find that technology actually lowers the number of people with don't knows about financial services. And high-tech users, they are likely to use or to do more bank transactions like payments, transfers, to use more ATMs. They use more mobile banking, yes. They use more internet banking, yes. And then they use less cash. Although the effect is relatively small with cash, but we find that higher technology actually moves people away from cash towards cashless transactions. But nevertheless, what we find is, in general, is that there is a low use of financial services for example, remittances, or transferring or receiving money using banks, or bill payments, or mobile banking, or ATM. So it still remains like an untapped potential of digital services in some sectors, especially in the rural areas. And then here we compare, or we try to see whether technology and income is related, which means whether technology and access to finance has an impact or not on financial on income growth. And then we find that people with low technology, there are 12%, for example, more likely to exit the low income group of people, or they are more likely to increase to become middle income, part of the middle income class. But more interestingly is that the higher the technology, the higher the likeliness they have to move into the medium income class. The high income class is not so much affected by high technologies, but the medium income class is the interesting point that we find. Okay, maybe I move towards the end because I think I'm reaching the time, or I already went through it. No? Okay, so here we compare the different services. So we were talking about formal, semi-formal, formal, non-bank financial services, family, or credit from suppliers. And then we try to see how much is the impact of the different services on income. So what we find is that people who are formally banked, okay, or they have access to formal financial banking, they are less likely to be low-income people, so almost 25%. And they are more likely to be medium income. And if we compare, for example, with borrowing from family or from informal services, actually people borrowing from family are even unlikely to be medium income class, or they are likely to become low income. Okay. Anyways, so what we find here is that actually access to finance has something to say about the income per capita of people. Huh? Anyway, so finally, how can technology can help to bring down these obstacles? Now, so we're talking that why people don't have financial services is because there are obstacles based on knowledge, based on access, based on personal motivations or whatever. So we find that technology actually helps to drop those perceptions, for example, of cost. The perception of high cost of finance, which is a dominant one in Indonesia, drops 20 to 30% whenever people have higher income level or when people have higher levels of technology. Okay, so this is very much, this actually connects with other studies in which they find that only 20% of individuals in Indonesia are actually financially literate. Okay, so we find that technology can actually help in educating or helping in literacy of finance in Indonesia. Another thing is that we find that this very early stage in additional services, payments, etc., compared to conventional services. We find also some services like saving for old age and insurance very low, which means that there is still a lot of things to do in these sorts of services. Then we find also that young adults or young people are actually left behind in most fields, which means that the young and vibrant population of Indonesia, most of them are unbanked. When we say unbanked is that first the access to those services and the use remains relatively low. We can think not only in having savings, but there are borrowing little money or getting loans for business or for housing or for cars or for other things which may be a new driver for the financial service in Indonesia. So they remain still like untapped. And then microfinance, which is associated with inclusion. So we find that actually microfinance is a very interesting phenomenon which falls here within the semi-formal services. But nevertheless, it has less impact than the formal services, which means that microfinance is not the solution to the financial inclusion problem that Indonesia is facing. So, okay, a way of concluding here. So yeah, income and education are the largest determinants of financial inclusion. Okay, these are long-term issues, no? Which means that only when people start having higher income and better education, we can expect that the level of financial inclusion will increase. No? We also find few services empowered by mobile technologies. Remittances, transfer, payments, mobile banking, ATM remains relatively low. We find this untapped potential of digital services. There are still many barriers placed in non-technological aspects. It's not because they don't have access, but a lot of voluntary reasons why people don't look for financial services still remain there. No? Cost remains as the largest barrier to financial inclusion. Nevertheless, technology can help to lower that barrier. And of course, our main questions on whether technology have a positive impact on financial inclusion and on income. So yes, we find that higher levels of technology can increase the demand for formal financial services, can lower informal services, and are also likely to push other or non-conventional financial services. And they have an impact on income of people. Okay, sorry, so maybe I already went too long. Okay, so that's from me. Thank you.
Ya, terima kasih untuk Bapak Miguel atas pemaparannya yang sangat jelas sekali ya terkait dengan hasil papernya. Baiklah, selanjutnya akan disampaikan Mbak Namira akan menyampaikan perspektifnya untuk apa yang telah disampaikan dari Bapak Miguel. Persilakan.
Okay, thank you, Dr. Miguel. I really enjoyed reading your paper. Lots of interesting insights, and yeah, so these are just questions and comments that I got as I read through the paper page by page. But to preface, I strongly disagree with the dichotomy between formal and informal financial institutions, because now we're living in remote workings, digital finance. So the dichotomy between formal and informal finance just no longer useful. Okay, so and also this research is very close to what I'm doing as well. So I'm researching microfinance. So yeah, so I really enjoy reading paper that is related to informal and formal finance, development finance. So first, I will start with the good things, what I find interesting from the paper. First is that it is timely, discussing innovation, whether mobile technologies, and it brings about inclusivity in development, and also that it focuses on the East of Indonesia, and it contrasts development in the West and East of Indonesia, and also the fact that it looks at both savings and credit, because the majority of papers that look at access to finance mainly study credit, but as we know, savings is both important because it can potentially improve a person's welfare. And so and then it uses relatively new data sets, and also last thing is that it touches upon voluntary exclusion. I think that is interesting, and a potential future research direction, looking at the probably the analytical connection between voluntary exclusion and poverty or welfare, or even inclusive development. For example, about related to religious issues or socio-cultural, and how that affects welfare. Okay, so let me start with the comments. First, regarding the writing and the structure, I think you explained it clearer at the presentation, but on the paper, maybe it can be more well versed, the questions, and also the transition from paragraphs. This is clearly writing, but the transition from paragraphs on bankability and mobile technology, I think it's not that smooth. Yeah, you could add something there to to make the transition better. And also it doesn't, I found that it doesn't evaluate previous literature on the effects of technology, mobile technology and finance, what previous studies have said and found about, the analytical connection between mobile technology and welfare, perhaps. And, what are the gaps there and what are you trying to intervene? And also, and you stated that the combined effects of technology and finance on income remain as empirical questions, whilst, we know there are lots of studies that have been conducted on that subject, but perhaps this is more about, the geographical gap, but you could state it in your paper. And also the literature, I found that it is limiting its geographical location coverage. Mostly you did not cite case studies beyond the Indonesian case, so you could add some other geographies. And also some of the determinants of financial inclusion have already been covered in previous literature but weren't cited. Yeah, so you could also add that. It could strengthen the paper or future research. And some definitional issues. Inclusive growth, it's not merely about income. There are other factors that can fall into the conceptualization of inclusive growth. So if you want to focus on income, you could define what inclusive growth is in your paper. And also to define welfare, because welfare can be about utility, about happiness, etc. So I found that you're focusing on income. Yeah, so yeah, you could define that in your paper as well. Yeah. And then also I have a question on page 1 about formal versus informal. As you stated as well in your presentation, smart technologies and formal finance have higher effects on incomes compared to the effects of semi-formal and informal finance, significant gaps in financial access. So are you questioning the formal versus informal, the legality of it, or other aspects? Because I believe that it's not merely about the legality, but also about, the facilities, the security, the infrastructure, etc. So if you want to simply look at the difference between the legality of the institution, so you could state that. But I also don't think that it's merely the formal versus informal that affects income. And yeah, and you stated that nearly 40% excluded from savings and almost 60% excluded from credit. So is there an overlap between these percentages, the 40% and 60%? And yeah, and also you stated that those in urban areas were male, older, and with higher education are more likely than those without these advantages to be financially included. I think this was written before the findings. I'm not sure, but if it was written before the findings, then you could cite from where you derive this conclusion. And also then on page 2, this you stated about the empirical gap. Yeah, the study questions whether access to mobile technologies influences the likelihood of individuals in East Indonesia enjoying improved financial access, and whether technologies play a role in removing obstacles to banking while driving banking services. This could be an empirical gap, but there is no linkage with the literature. Like your intervention, your main analytical research intervention on the study of financial technology and inclusion. You explained it pretty well before on the presentation, but it wasn't so clear on the paper about your gap. And then informality and development, yeah, as you stated as well in your presentation, it could very well be, a future research area, to explore more about, informal financial services and how that affects welfare, inclusive growth, development. And yeah, I also disagrees with your conclusion from your findings that, you know, the higher proportion of informal credit borrowing by women compared to men, women have greater access to informal services, because it's not like that actually, because it's oftentimes it's women who borrow from microcredit institutions, for instance, because but men uses it. It's been well documented in studies on microfinance and access to finance, access to credit, and then men exert their power. So it's not merely about who got to receive the loan, but who's using the loan. So yeah, be careful with the wording. So it's not that men don't have access to informal credit. It's just merely women who go there and borrow. And then on page 8, together with education, income accounts for the most significant determinant of financial inclusion, but isn't that intuitive? Income obviously will be a determinant of financial inclusion. So yeah, it's quite slippery. And yeah, and I think you've explained that on your presentation. It is associated with financial technology literacy. Yeah, to add the interaction term. And yeah, and then about, you know, the lack of clarity. Low income might be a problem, but high income could be a choice. Could be depend on someone's career aspiration. Because you stated that the use of technology reduces the likelihood of people belonging to a certain income level. Yeah, and this is just a question because I haven't looked at the data set, so whether this is panel data or cross-sectional, to look at whether this is the same individuals over time. Yeah, and then finally, I have a question concerning concepts. So the study finds that mobile technologies and access to finance significantly increase the likelihood of higher incomes. Informal services play only 3% in favor of individuals to be excluded from the low income level. So inclusive growth is a concept that advances equitable opportunities for economic participants incurred by every section of the society. But the main source of financing of low-income individuals is informal credit institutions. So a better question would be regarding whether informal services contribute to upward economic mobility. So I guess my question is, what is the study's conceptualization of inclusive growth? Is it merely having access to formal financial institution? Is that inclusive, or does have access to informal credit institutions not inclusive, for instance? So what is your conceptualization of inclusive growth? But yeah, overall interesting paper. Thank you.
Ya, terima kasih. Kita kembali ke mode bahasa Indonesia lagi ya. Terima kasih atas pemaparannya dari Mbak Namira. Mungkin Pak Miguel, do you have any like counter maybe from Mbak Namira?
Okay. Great. Thank you very much, Namira, for the comments. I find them very interesting and deep. No? So at least I'm happy that somebody read the paper deeply. So that's always that's always nice. No? Okay, so yeah, there are many. I pretty understand very much your comments about, for example, the smoothness. No, how do I jump from one idea to the other? I find the paper very challenging, honestly. When I was working on it, because I mean, try to bring financial inclusion, technology, and development issues into a single paper is not. I mean, it's naturally not an easy way to connect those things. No? It was a very long paper. The length of the paper initially was very, very long, precisely because I tried to build bridges, and the paper actually was rejected earlier 2 or 3 times. No? So it really has to go through a lot of process of reviewing, because putting those ideas together actually is not it's a challenging thing. No? So yeah, I understand that the smoothness of the paper sometimes is, I mean, it's not the easiest paper to read or friendly connecting ideas. No? So yeah, I appreciate very much your comments there. About formality and informality, well, this issue actually it's not very much whether we get credit or financial services into a bank which is legally settled or non-legally settled, or whether they have a nice branch or not. So, it's more related, yes, legality, but also is related to the system that formal and informal providers use to run the services and to enforce the commitments. Okay, and also it's very much related to the cost. So the thing with informal services is that from the cost point of view, they tend to be far, 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 far more expensive than the formal sectors. So there is an important distinction then from the point of view of cost. The second one is from the point of view of legality, which means that someone who is the advantage of informal providers is that they have better information because they are more into the field, and they have, since they are not legalized, they have to look for different ways of enforcing the contracts and the relations between the individuals and the financial system. And that can create unhealthy relations in society. No? The way, for example, they enforce a loan that has not been paid, no? Or documents that they require, no? Or anyway, there are many things related to the informality of services which are, I think, important. Yes, I didn't address them very properly in the paper. No? I didn't go too deep to explain why informality matters. No? But I think in the literature is a very important issue, no? The distinction between formal and informal. I repeat, I think there are many important aspects, no? Between formality and informality. So another thing is that the paper is really an empirical paper from the point of view that if you look into the cases of financial inclusion in India, in Africa, in China, you find common things, but you also have things which are very particular, very specific of each region. For example, this thing of women in some places, I mean, you mentioned, no, that women here are the ones getting the credit, but the husbands are the ones spending the money. That's a very specific issue in the Indonesian context. Huh? In Africa, you also have some other very specific contextual things. So that makes that the issue of financial inclusion is a very empirical one, which means that you don't have a model that can fit all countries equally well. So you have to look into these differences specific at each country. No? So we actually have some references there on papers on India, on Africa. Kenya has a lot of papers. Even the access to technology differs substantially. So what papers on India talk about technology, access to technology, they're actually talking about mobile phones, no? Which means technologically speaking, we are talking at a very different level. No? So that's why sometimes it's difficult to compare papers across countries, because the access, the technological aspects or the maturity of the institutions are very different, or the size of the financial market also differs substantially. Yeah? So yeah, that's why this paper is really an empirical one. Okay, another thing, yes, there is a lot of overlapping. So when we say formal and informal, in reality, many people have access to both. Even formal saving and informal savings, or formal credit and informal credit. So those two systems, formal and informal, need to coexist. So that's okay. So that's also another interesting thing. Not only overlapping in savings and credit, but even overlapping between formality and informality. So there is a lot of overlapping into the financial system. I didn't really go, or I didn't find how to try to distinguish, no, between this issue of overlapping, but it's actually I mean, for me, the most interesting thing of the paper is that it opens you, at least in my case, it opened me topics or issues for future research. So you mentioned, for example, one about the use of money. That's a different issue, no? Whether the one borrowing is the wife and the one spending is the man, that's actually a very interesting field to be studied. No? Or there, for example, there is an issue that people in Java Timor, they tend more towards informality than formality. although Java Tibor is far more developed than areas in NTT or Sulawesi and other places which have far lower levels of development, lower levels of regional, of urbanization, etc. No? So that's another very interesting issue that came here. No? Okay, sorry, I'm not answering in very systematically, no, but I'm just going to those things that I recall a little bit. No? Another point that you mentioned here is about the whether of what do I refer by inclusive, no? Inclusive growth. Actually, it's more related to whether financial system or the financial system in Indonesia is inclusive, which means that it allows growth for everyone. Okay. So a little bit what we found is that some people benefit more than others from financial services. And that's what we call a little bit, I mean, many people are even excluded, completely excluded. We were talking there about voluntary and involuntary reasons. So those involuntary reasons are people who are actually excluded from the financial sector. And then we find that that exclusion is actually related to education or is related to the income level, that can be related to not having collaterals, for example, or it may be related to the age, that are too young. Okay, and for the formal banking sector, someone who is young and has low income, I mean, you can't give them a loan. That's why people have to go to informal sectors. No? So that's what we refer a little bit with the issue of inclusiveness, no? Whether the financial sector is inclusive or not. I mean, in promoting growth equally among all people. No? The issue of females is very interesting, not only in finance, also in poverty. And I mean, in Indonesia, female have, it's a very interesting field for empirical studies, no? To compare behavior of female. No? So yeah, what is interesting is that you mentioned a little bit like the female are the ones borrowing, but actually the husband is the one spending. Yeah, maybe for consumption, credit, etc. Yes, no? But we also find that there is for credit for housing or longer term, no? Or for business or for operating businesses, which man is actually the one getting access to that. No? And, so yeah, motivations, drivers, and use of credit between male and female, it's a field also for research. No? Anyway, yes, about development, yes. I mean, having an indicator of expenditure or income per capita is a very narrow proxy for development. Yes, I mean, I agree with you, no, that it really doesn't portray whether the financial sector is promoting economic development as is understood more, I mean, as it comprehensively is more, it's not well approached by a single indicator, yes. Huh? Nevertheless, income per capita or expenditure per capita, it's a very common indicator in the literature that allows you to compare your results or your findings with other studies. No? But yeah, I mean, it doesn't intend to capture the entire economic development that a country is experiencing. No? Or the welfare, even the welfare of individuals. No? It's a very narrow concept, but it tells you something about improvement in the life of people. No? Okay. Well, yes, maybe I think that's all from me. Yeah, there are many interesting things that you mentioned, Namira, that are very useful for future research. Yes, I mean, I am still developing this issue, no? Moving towards other aspects and also other data sets. This data set is interesting because it's very long, but it's a single year data. So we only have data on a single period. So we can't really talk about the process of development, or we cannot talk about these factors affecting the change in individuals because we only have 1 year of data. No? So yeah, it's very limited from that point of view. No? Okay, so that's more or less my reply. But yeah, thank you very much, Namira, for the points.
Okay, thank you, Dr. Miguel. Baiklah, saya buka untuk pertanyaan atau tanya jawab dari peserta diskusi. Persilakan. Boleh bertanya ke Pak Miguel atau Mbak Namira. Dipersilakan. Pak Rumaya.
Thank you. Terima kasih, Pak Zaki. I agree. It's a very interesting paper. And a lot of things interesting to be developed. I was amazed with the size of the data. Actually, it's 20,000 observation. 20,000. Is that correct, Pak Miguel? That big of observation, yes, you have one shot data, but you can do some interesting stuff. If you're familiar with propensity score matching, you actually can create, like quasi experimental things. So you can like make a matching those who have the same characteristic of those who have the access to technology and those who doesn't, and you have more to overcome the indigeneity, right? Because the way you handle it at the moment is not quite convincing from my side. It's just using the sure methods, But I think you can have stronger results, in terms statistically if using like a more advanced technique like quasi probability score matching. And I just wondering, Pak Miguel, what is the difference between formal, semi-formal? They are a bit confused on that. And do you several times you mentioned about the costs, but different costs between those in the formal and informal. Do the data actually have something on it? I mean, in the questionnaires on the costs. Because I'm curious on that. If there is a number on it, that'd be interesting to know how big is actually the gap between the cost of these two sectors. And also, do you also have data on this, like the financial aspect of the family, like how many debt they have, totally and by institution? Because that would be interesting to see how big is the debt compared to their income, and how severely is the household in debt, and you can see cross income, is that true that the lowest income is have the highest proportion of debt compared to the high income? That's something that also interesting to find out if you have the data. And also about what you said, but one person can have several source of credit. Now, if you have like a Venn diagram, it'd be interesting, because the more individuals have access to several types of credit, so it means that the more option that the person have. So you can develop a measure of in terms of I don't know, like option, whether someone is being doesn't have any choice, very limited in choice. So that is the idea of maybe explaining why the formal credit is expensive. It's basically targeted to people that doesn't have a choice. So they don't have a choice, so that's why it's becoming so expensive, right? And also about the gender issues, it's very interesting to see, because that like the gender structure, I mean, in terms of gender power relations is different across Indonesia. In some area, I mean, in Java, is like men is like more have a more power distance high than men than women, but in other parts it's more actually on the same level. So to see these differences in cultural dynamics is interesting to whether that is translate to the financial behavior of the household, like you have been discussing with Namira. Pak Alin do some also interesting stuff on this this issue of ethnicity and woman and men relations. So he I don't know, he found a anthropologic study that a map in ethnicity in Indonesia based on the patriarchy and matriarchy level, so they make like a scale. So on the extreme will be matriarchal culture like in Padang, and on other scale is more very patriotic, I don't know which part of Indonesia, like that. So he used that data on this scale of gender relationship to examine the gap between labor participation men and women, and found out an interesting result, like the more ethnicity have more like a balance, relation between men and women, the more likely the woman from that ethnic is go to the labor market. So you can use the in this context in the financial decision making at the household. I think that is all my question and my comments. I enjoyed the presentation. Thank you, Pak Miguel and Bu Namira.
Ya, terima kasih Pak Rumaya. Do you have answer or something like clarification?
Yes, no, actually it's a very, I have to say that this paper started because actually through RISED, initially there was a research grant, and then Parumaya suggested, Ari and Dafa, why don't you help Miguel to try to develop a paper? No? So actually everything started from there. No? And then we started exploring different data sets. So we got actually one paper also published using the FinTech, the financial inclusion data set from the World Bank. And then we also try to explore local data sets. No? And then we find this Sophia in the middle. No? Actually, let me share a little bit if you go into the website of the data set, then they explain there very well the concept of the data. So actually the distinction between formal, informal, semi-formal, actually is a distinction based by it was actually proposed by the same survey. Yeah? So we are borrowing the definitions that they made. Yeah? Some of them we generalize or we aggregate data because in some aspects there are very few positive observations. But for example, here they differentiate between financial inclusion. What do they mean by financial inclusion and financial exclusion? Those formally serve, those semi-formal serve, those informal serve. No? So in informal, you have like the arisan, for example, no? Which is a very specific aspect of the Indonesian culture. No? And in the semi-formal access, yes, you have like venture capital, you have cooperative, and then you have smaller units that actually have a lot of role in some provinces. Huh? Here we were asking about those who are formally included and semi-formal and informal and completely excluded. So yes, there are some overlapping. Huh? So for example, 30% of people have actually access to both. Huh? To formal and to informal financial services in some aspects, in some of the services provided. So anyway, if you go into the data sets, which was sponsored by Vapenas, then you will find a lot of interesting definitions here that there is a complete section on savings, another one on loans, another one on payments and transfer services, and insurance. Actually, the paper was a little bit ambitious in the sense that we tried to cover everything in a single paper. We could have chosen, for example, only focusing on savings or credits or in non-conventional services and in a specific group like the elderly or women or the youth, and it would have been enough. So the paper was a little bit too ambitious trying to cover everything, from formal, informal, and different groups of people, different locations. So, but what I want to say here is that there are many issues that can become an object of a study here. For example, only to focus on insurance or in credit for non-consumption aspects, like business, housing, which is a very interesting aspect, and very few people have do research there. Or then distinguishing, for example, the question of, the issue that came very often here, that the distinction between formality and informality. So you can actually test more rigorously what is the impact of informal and informal sector in different aspects. So yeah, I mean, what I want to say is that I find very few papers in Indonesia about financial inclusion. That this is the first paper, the Sophia database is the first paper that uses the Sophia. At least when I wrote the paper, there was anyone else writing or using this data set. So that's why in my novelty it was a little bit like, let's try to make use of all the data available there. Huh? But in reality, you can focus in a specific aspect, like once again, gender or the youth or the elderly, and that will be already a very interesting field for research. Huh? So anyway, but this is a very interesting data set. If you have time to explore it, go through it. Huh? It's very interesting. Huh? So we just try to bring from the descriptive statistics that the study provides very well, we try to provide a more econometric approach, no, to explain the links they found there. No? Okay, thank you, Mariana.
Okay, thank you for the answer. And I will read the questions from the chat. There is a question from Mbak Hesti Arini. My apologies for being unable to turn on the camera nor the microphone. Thank you for sharing. My question from the study determinants: did you find a specific driver or motive to choose that service in each location? For example, in East Java, most people are willing to use bank service because of a certain reason, while people in other provinces prefer informal service due to another reason.
Okay, great. Thank you, Hesti, for the question. Well, actually, we differentiate between Java Timor and other provinces. So we didn't cover each one of the 4 provinces, but yes, we tried to look at whether the motivations of people in East Java differ from the motivations of other provinces. No? So, for example, in many aspects, we found that, for example, I mentioned that people in Java Timor are less likely to be formally banked. I mean, they have less likeliness to be formally engaged in banking services, no? And then they use more cash. So there is something very specific from the Java Timor people. No? And we try to find the motivations. So, for example, we find that people in Java Timor, more people in Jatim respond that they don't need borrowing. They don't need to borrow money they don't need to borrow. Or there are also people in Java Timor, while some people say they don't need, there are also more people who say they don't want. So it means people in Java Timor are actually self-excluding themselves voluntarily. Okay, so the reason why they don't go into credit is because they don't want. Okay, and actually some people we find that it's not because they already have loans and they cannot pay, but it's because they actually say we don't have loans, but we feel we don't need more. Huh? We try to test that, and I mean it's not only descriptive statistics. We try to test that with the Provit model, and then we find that people in Java Timor have that characteristics of they don't see the need for that. Huh? And then we also study some motivations in table 9 of the paper. You can find there, for example, when people of Java Timor compare with other provinces related to access. They don't have mobile phones, or they don't know how to do it, or they don't need. Yes, I mean, we provide there a series of aspects that differentiate people from Java Timor from other provinces. No? Anyway, there are many, but you can go through it on the paper. And then, but what is interesting is that many of them are voluntary reasons. It's not that they lack documents or they are rejected, but they are self-excluding from formal services, and they are actually moving more towards informal services or semi-formal, which are, Java Timor is one of the regions with the largest number of kooperasi in the entire country. So that's a possible reason why people in Java Timor are less formally integrated in the financial system, because informal services are more popular in Java Timor than in other parts of Indonesia. But yeah, I mean, there are many things that, sorry, I really didn't read at very detail now before the presentation, but yeah, you can go there through, and then you can see motivations, barriers that people in Java Timor find compared to other provinces. Thank you, Hesti, for the question.
Right, thank you for the answer. Yang lainnya ada pertanyaan? Silakan. Oke, kalau belum ada saya tanya ya Pak ya. Jadi to be honest, I get attracted with the data set that is quite new ya, seperti yang disampaikan Mbak Namira. So I want to ask about the it's like the data set that is provided by Sophia. So the data set that you use is the individual data set, right?
Yes.
So is Sophia also providing the household or the business scale of the data set? So it's like the access of the technology for the business, for example, like small medium enterprises, something like that. Yeah.
Well, as far as I know, it's an individual survey, which means respondents are individuals and questions are addressed specifically to the person itself. Although in some questions they refer to the households, but generally they are referring to individuals. There is a section in which they talk about business, considering or assuming that people run their businesses in personal basis. That there are small companies or small enterprises run by people, where sometimes the personal and the business cannot be distinguished. It's not very easily distinguished where is the limit between the personal finance and the business finance. So they have some information there, for example, credit and saving for businesses, and specific sections in which they address things related to businesses. I think there are also related to activities, specific activities, farming or trade, or but it's quite interesting, the data set for individuals, not for companies.
Okay, but is there any like the family effect? Because if I compare it like the IFLS, like Indonesian Family Life Survey, there is like the individual data set and also like the household in which you like the aggregate. So the decision of the wife maybe will be affected by the decision of the head of the family. So is there any effect of that in the Sophia?
Yes, it's likely there are a good number of questions in which the household is brought into the picture. Decisions, or whether somebody else in the family has an account, or whether they are using the account of somebody else in the family to transact money. So yes, there are issues related to household and some related to the person. Actually, we tried to compare before with IFLs. We actually run a model using the data from IFLs, but nevertheless, we found that the data of financial services wasn't very complete. So there are a lot of blank answers, or there are inconsistencies in the data, which means it really takes a lot of time to clean the data from the IFLs. And besides, it doesn't provide as much information as the Sophia does, related to motivations, to barriers, or distinguishing financial services. So we didn't find the IFLs very complete in comparison with this one, related to the focus of finance.
Yeah, so if I may say that, maybe it's like whether or not the individual has the business or not, it may affect the likelihood of someone using the technology, right? Maybe like if someone has a business, maybe they want to promote their business through the utilization of technology, something like that. So it can be one of the determinant, right?
Yes, yes, actually it's true. In some of the aspects, you can easily jump into household concepts, which means not necessarily the person answering, but somebody else in the house, etc. Because it's very common actually in the context of Indonesia that financial services are shared by family members. So yes, in some aspects, I think they make the distinctions between when it's only talking about individuals and when the answer relates to the entire household.
Right. Yang lainnya ada yang mau ditanyakan, dipersilakan. Kita masih ada waktu mungkin satu pertanyaan lagi ya, karena sudah jam 5. Dipersilakan. Satu pertanyaan lagi. Mungkin dari intern ya. Ini internnya masih belum tanya ini. So we have the internship program, sir. So yeah, we try to boost them to question in the discussion. Dipersilakan. Adik intern. Oh yeah.
I don't know if I want to ask or not, but I'm very intrigued with the topic also, and especially the comments by Namira also about the role of a woman who doesn't have any less barriers than men. And I agree that I think it is untrue also, because we can see that men has more bargaining. I mean, in a sense of intra-household bargaining power. I think that in your paper, if you wanted to see, if you wanted to differentiate between women and men, I think it's important also to include whether the woman is married or not. I mean, the statement that Namira said also about if even though women access to credit more than men, but it may also that it's because that they are, how do you say it? Well, the women are more responsible with the financial in the household, but it doesn't necessarily mean that those money are consumed by the women only, because I think it's actually good for further research, but I think maybe in the next research we can differentiate between women who are married and women who aren't married. Well, I don't know if that's a question or not, but that's a little bit of my comment. Thank you.
Yes, thank you.
Mbak Namira, do you have any comment or something?
Yeah, thank you very much, because the issue of gender is very interesting, and there is also a lot of dispute there, understanding distinctions that you have to do. I mean, I completely agree with you, that, but actually you can also conclude on that way that it's not a matter of gender. I mean, it doesn't mean that it's not because there are women that they have more or less access, but there are actually other factors. Because when you bring into the point of view that the level of education, the level of income, the job, and the location, and the use of technology, women can actually have more power than men. Okay, so it's not merely the gender that this defines the access to finance, but there are also many other aspects which are there. No? Yes, so there are a lot of distinctions that you have to do here. Maybe Seki will be interesting with it. I remember when Seki said one of my papers, he told me, hey, sir, you are also into issues related to gender. He was like disappointed because he doesn't believe in issues related to gender. No? But yeah, I think there are a lot of important aspects there in gender, no? That we have to go beyond distinguishing by sex, no? Whether somebody is man or female. There are other aspects, no? The marital status, completely agree. The level of education, completely agree. The level of skills to manage money. That's one of the fields in financial inclusion. There is an aspect of knowledge and the aspect of skill that I didn't touch them at all in this paper, okay? Which can actually determine or explain why women appear to have, for example, less barriers to finance. Because perhaps they are more skillful in going through the obstacles. So, but I mean, once again, in a paper, you can't solve all the issues. Yes, distinctions perhaps are needed to do clarifications, of course, yes. No? But yeah, those are fields for future research, no? The skills. You also have to prove your approach. No? mean, what I usually tell the people with issues related to gender is you have to prove that female are more skillful to handle money or more responsible, okay? Or that the marital status really matters. There are a lot of gender issues in the air which are not statistically tested, no? Or econometrically tested or empirically well tested, which that opens a field, no, for gender studies in Indonesia. But as Parumaya said, they have to be more rigorously carried out, no? Not only by distinguishing sex, but you have to consider many other aspects. Yes, no, I agree. But we have to prove them. No? We have to go beyond the popular knowledge of issues related to gender. But thank you, Aisha, very much for the insights. Thank you.
Mbak Namira, silakan.
Yeah, can I comment a little bit? Yeah, I agree with you that gender issues more observable through qualitative research, because we can interview the respondents and really try to understand how socio-cultural issues affect men and women differently. But I also disagree that what you said, that gender is not really about categorization on the basis of sex. It's how development issues, socioeconomic issues affect each respective gender, how it is experienced by men and women. And I think it is important to understand that. And unless we're living in an equal world where men and women can benefit from, every single aspect, facilities equally, then we should continue to try to understand development from a gender perspective. And also what I wrote on the chat, feminization of poverty. It's how poverty is experienced by women and men differently, and how woman is the one who severely affected by situations such as access to finance, and even poverty, like female-headed households. Many of households living in poverty are headed by females. So I think it's important to continue to study development from a gender perspective, and also we can try to develop a model to be able to observe gender issues from quantitative research and not just qualitative. Thank you.
Yes, thank you, Namira. Yes, actually in this same data, there are a lot of distinctions you can apply. For example, when we talk about barriers and motivations, there are some barriers or motivations which are very gender specific. For example, we can't deny that many of the choices of female to be or not to be included, there are also there are choices that people made. No? So it's interesting to figure out, with the different characteristics they provide here, how men and female make decisions on inclusion, especially there are some variables looking into voluntary aspects of finance, no? And involuntary aspects of finance. There are both of them, and then you can try to test using the gender approach, because I am sure there are important differences how men and female make decisions, no? And the choices they made. No? But yeah, I mean, we have to go beyond it's not a matter of sex. No? I mean, there are so many other aspects which most of the studies tend to conclude that. No? I mean, it's not gender in itself, but is that, for example, in some places women have clearly lower level of education in some countries in Africa. So it's not because there are women that are excluded, but it's because they have lower knowledge, for example, of financial services than men, because of education, not because there are women, no? Or because culturally speaking, women have no right to handle. I mean, there are very interesting studies in other contexts that tell you, that gender issues that are very specific to countries, no? to regions. we haven't reached that moment in which we have reached equality, even in Europe. I mean, even if you are in Europe, if you are talking about gender issues in Spain and gender issues in the UK, I mean, there are many differences between women in both places. No? So I don't think we have reached a point in which we can talk that we have reached the level of equality. No? But anyway, we are in the middle of gender empirical. There is a lot of empirical studies going around gender. No? And I think we should continue looking into it, no? Try to understand better the gender aspects. No?
Mbak Namira mau ada yang disampaikan?
No.
Oke.
Thank you.
Oke. Baiklah, kalau sudah tidak ada yang bertanya dan disampaikan lagi, saya akhiri untuk diskusi pada sore hari ini. Diskusinya sangat menarik ya. Jadi awalnya kita diskusi tentang akses to teknologi, memang langsung merembet ke isu-isu gender karena memang mungkin bisa menjadi future research yang sangat menarik ya untuk yang gender gap ini. Baiklah, terima kasih untuk rekan-rekan yang sudah hadir pada sore hari ini, dan saya ucapkan juga terima kasih untuk Bapak Miguel dan Mbak Namira atas waktunya telah menyampaikan materi yang sangat luar biasa. Dan sekian diskusi pada sore hari ini. Mohon maaf apabila ada salah kata. Selamat sore.
Thank you very much, Eki. Thank you,
Thank
Sonia.
you.